Why did the banks just get bailed out, and why did they crash in the first place? I don't know about you, but I wanted to hear some answers. To begin, 2 weeks ago, there was a bank out in California called Silvergate, and it collapsed. It crashed, which caused a little bit of hysteria. Now, you may not have heard about that, but a few multimillionaires and billionaires did, and as a result, they started pulling their money out of Silicon Valley Bank. Now, the reason why Silvergate Bank collapsed is they were in bed with a little-known company called FTX. Remember that guy that took the people's money and now he's in jail for that? Yeah, the crypto man. Now, rumors travel fast, especially when we have the remote control to the world right here in our hand. As you can imagine, it traveled real quick when people thought they were going to lose millions and billions of dollars. So as a result, all of these multimillionaires and billionaires began pulling their money out of Silicon Valley Bank. And as a result, the banks ran out of money. Once they seen this happening, the bank was forced to sell off bonds. Now, these were bonds that they purchased at a very, very low rate. So when the federal funds rate was around literally 0.5%, these bonds were purchased, and it's not uncommon for banks to own bonds as part of their portfolio. However, what wasn't accounted for is that the interest rates were going to go up really fast and double literally within 1 year's time. So as rates go up, the price of bonds go down. And this caused a major They lost billions of dollars, nearly $3 billion they lost in the sale of their bonds. Now, I did an interesting video on bonds. I'll put a link below and you'll want to see that, but don't go there yet because all of this is going to connect. Stay with me. So as the banks lost nearly $3 billion, they were forced to close their doors and lots of people lost a lot of money. And just like that, poof, the money was gone. Now, the reason for this collapse is basically blamed on poor management and poor diversification of funds. Silicon Valley Bank was extremely heavy on bonds and basically just didn't have the funds to cover the run on the bank. Now, the money that we put in banks is insured by the FDIC, Federal Deposit Insurance Corporation, and they insure the money up to $250,000. Anything more than that, then the government does not insure that money. So if the money goes away, it goes away. It's gone. So get this, that bank had $175 billion in deposits. However, only 2.7% of the deposits were FDIC insured. So in other words, there was 97.3% of that money was uninsured. So people need to understand this is not your average bank. This is not a small hometown bank. These were heavy hitters. These were multi-millionaires and billionaires who had money in not only Silicon Valley Bank, but also Signature Bank and Silvergate Bank. Now, to give you some comparison, the average bank has around 80% of their depositors that are covered by FDIC, meaning that 20% of them are not insured. They have over the $250,000, and then the other 80% are insured. So you can see that Silicon Valley was way tilted on the 97.3% side. But listen, you also have to wrap your head around knowing that banks are also used by businesses, and businesses are considered small businesses if they have 50 to 500 employees. Now, if you have 100 employees and the average salary is $70,000, you can see how $7 million a year is going out in salaries. Now, if you divide that by every pay period, say every 2 weeks, you're looking at $270,000 that has to be in your business account every 2 weeks to write those payroll checks. And there were a lot of businesses that I know you've heard of that banked with Silicon Valley Bank. For example, a little company you may have heard of called Roku. Roku had $487 million in Silicon Valley Bank. Another company called Roblox, they had $150 million in Silicon Valley Bank. And then Circle, a U.S. crypto firm, had $3.3 billion in Silicon Valley Bank. But why did the federal government, just 3 days after the bank collapsed, tell everyone, you're going to be made whole. Your money will be there. You will get your money. The obvious reason is to maintain stability with the economy. If they didn't bail them out, their fear was they'd have mass hysteria all across the United States, and a massive run on the banks would cause mass destruction of the entire U.S. economy. And that would basically put us in a position that we've never been in before. And we've all heard of the Great Depression of 1933. This happened between 1930 and 1933 after the stock market crashed in 1929. As a result, thousands of banks collapsed. And believe it or not, that run of banks started in a little town called Nashville, Tennessee, my hometown, from Hermitage National Bank. And Hermitage National Bank, people took all their money out within one day. As a result, it created mass hysteria. It caused a run on banks. And such, 9,000 banks closed in 3 years. So you may think, wow, 9,000 banks, what effect did that have on the economy? Well, I'll give you a little bit of numbers. 9 million savings accounts were lost, closed. People lost millions and millions of dollars. And I don't mean just one person. I'm talking about people all around the United States. Your average people lost everything. As a result, over 86,000 businesses closed their doors and wages decreased by 60%. Unemployment rate was 25%. 25% of the workforce in the United States was out of work, and it literally took 10 years for it to get halfway back to where it was in the 20s. Now, it's important to know that banks do not have to keep all the money that you put into your bank account in the bank. They call this fractional reserve banking. So if you put money in the bank, they only are required to keep 10% of the money that you put into their bank. So go with me. If you put $1,000 into your bank account, the bank is required to keep 10%, $100. They can take $900 and loan that out. Now, the person that they gave the $900 to can go to another bank and make a deposit in that bank. That bank can then take and hold $90, which is 10% of $900, and they can loan out $810. And this can go on and on and on. Now, imagine if everyone pulled out all of their money of just hundreds of banks. Businesses could not pay employees. Business would absolutely go under. Layoffs would be at a massive scale, and we would see famine like we've never experienced before in our lifetimes. Now, it's important to know that the government said they're going to make the people whole, but they are not going to make the investors of the bank whole. That's just the risk that you take. But the people that had deposits in those banks, they are going to make those people whole. They're going to have their money. That said, I still think the people that goofed up, that just dropped the ball, the mismanagement, people have to be held accountable. It's like raising a child. They keep doing the same thing over and over again. You've got to teach them. They have to learn a lesson, right? But this is a lot of people's concern. What would stop other banks? If other banks know that the government's going to bail them out, what would stop the other banks from taking huge risk with their money because they figured, oh, what the hell? The government will bail out $175 billion. Who knows what will happen next? But just know whatever that may be, whatever I learn, I'm going to share with you. So give us a thumbs up, subscribe to the channel, and be sure to watch that other video that I mentioned that I put below about bonds. It's really interesting. I think you'll like it.